Let's bring in Scott Wren. He is Wells Fargo Investment Institute's Senior Global Market Strategist. Scott, certainly the news flow around coronavirus was viewed as the proximate cause of this sell-off. But, Jared, just rattling off, we saw in the VIX, we've seen kind of a swift reversal here in terms of sentiment. By your estimate and just kind of the way you see it, where's the market stand right now? Because I think a couple of weeks ago, hearing that we were going to finish January in the red would have shocked many investors.
It would have shocked, and but when you think of it, we've had obviously a good run last year. We were from the 1st of October until the top that we saw in the market. That was about a 12% run. So really to cough up, we're down about 3%, maybe a touch more off the all-time record high. This is one of those situations where I think probably a lot of traders were looking for an excuse to take some money off the table. We had a little chasing there when the market started to run. A lot of times that's from weak hands and you get some bad news and they're out. And so I think that's largely what contributed here. But clearly the coronavirus news is what took the market down here. And really, if you think of it, if you're a trader and you're coming into the weekend, do you really want to carry a lot coming into the weekend when you don't know what the news is? I mean, I think it's a good idea they had the press conference right now, the White House press conference, but you don't know what news is going to come out over the weekend, and I think it's better to be safe than sorry, and we're probably seeing some squaring up of positions here as we move into the close.
So I think we're hearing kind of two things here, that yes, people maybe wanted to take advantage of this, lighten up a little bit here. Who wants to be long right now when you don't know what's happening and you have this coronavirus hanging out there? But are we also giving too much credit to coronavirus? Because, look, we've had some earnings that haven't been great. We've got the Iowa caucuses coming up, and Bernie Sanders is polling incredibly well right now. Are there other concerns out there that you think investors are trying to get their hands around that are also leading to this volatility?
Well, there are a lot of moving parts out there, but I think that really the Iowa caucuses, I mean, I think the market's not really going to worry too much. Even if Bernie wins in Iowa, they're going to, we've got to see this field narrow a little bit, and we can guess the 3 or 4 top contenders for sure. But there are other things to be concerned about. But really for us, and prior to this virus, I think really the market's been pretty convinced we're going to see some modest economic growth, some modest inflation. Fed's going to remain easy. The probability of a recession in the next 12 months is pretty low. So, those are all positives, and I think those have really overridden and will probably continue to override some of these other concerns in the near term. I mean, between now and the end of the year, and granted there's a lot that's going on, if we saw a total return from this point here of, 7%, something like that, that sounds pretty reasonable to us.
Let me ask you about, this is Jared Blakely, by the way. Let me ask you about the bond market, because we got the 10-year down about 40 basis points for January, and the yield curve is contracting. In fact, the 3-month 10-year is now inverted for the first time since, I think, last October. And these moves were exacerbated by the coronavirus, but they had started before that. What do you see the risks to this trend continuing?
Well, for sure. And, I'm an equity guy, but I'm certainly watching the 2 to 10 spread is what I tend to watch, and then just the yield itself. And clearly there's been a flight to quality there. For us, we're looking for the 10-year to be in the 1.5% to 2% range by the end of the year. So we're down at the lower end of that range, obviously, today. We wouldn't think that really the bond markets, the yield's going to drop a whole lot below where we are right now, because really for us, with this virus, if you look at some of these historical outbreaks on various times of viruses, they tend to hit the market for a short period of time. You see a quick recovery because really the virus doesn't do what the worst fears are. And that's I'm not a doctor, but I think that's the highest probability. It seems to me, you look at the World Health Organization, you look at the CDC, you watch some of these comments from medical teams at, say, Johns Hopkins and other universities. They feel like they have a pretty good handle on this, and that they're going to be able to control this. And when you see the White House do what it did today and these other countries doing things, I think that's a good idea. And so we'll ride through this. The market will get back to fundamentals at some point, but we might be in a little bit of a rocky road here. You pull back 5, 7, even 10% from the top, and in the run we've had, that makes sense to me as being someplace that investors could look to really step back in.
Yeah. All right, Scott, you guys are based in St. Louis. You on the Chiefs this weekend, or is that an in-state rivalry? Or how do we do that?
Well, I tell you, we, as a kid, I always loved the 49ers. That's when they were winning all the Super Bowl stuff. I love the Chiefs, too. And since we don't have the Rams here in town anymore, I'd say most of St. Louis is going to be pulling for the Chiefs, and I'm certainly one of those people.
All right, Scott Wren with the Wells Fargo Investment Institute. Enjoy the game on Sunday. We'll talk to you soon.
All right. Have a great weekend, guys. Thanks.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.